All right, what's going on, everybody? Whoa, echo. Hold on, let me boot myself. All right, should be better. Why can't I hear myself? Damn, this is weird. Hold on. How do I fix this? I hope the echo's not too bad on your side. Yo, there's two. See this? All right, I gotta fix it. I'm not tech savvy like this. Hold on, let's see if it helps out. Oh, I gotta remove it. All right, better? No, this echo is terrible. I don't know what happened. Oh, I know. All right, should be better now. Yeah, there it is. All right, sorry about that. Technical difficulties, but we are all set and ready to go here. Let me know in the chat if you can hear me fine, if it's not echoey anymore. That would be ideal just before I keep moving here. But we'll get into some weekly prep as we always do. This is half on, or it's all on YouTube, but it's on YouTube. If you're not subbed over there, I really don't know what you're doing at this point. No, I'm just kidding. But yeah, subscribe to the channel. I appreciate that. If you're over on X, let me know in this comment bar. And if you got any names you guys want to check out, feel free to drop them below. We will get to them at some point or another tonight. For the most part, as always, I start with the overall market. So specifically, I'll start with NASDAQ, and then we'll move on over into a bunch of other individual names. So let's see what we got here. We got Mr. Bear. What's up, man? Prime. What's going on, Prime? Watching over on YouTube. B Stocks. What's up, man? Fati's back. I haven't seen you in a while, man. Hope all is well. We got Trading Stonks. Welcome. What's going on, dude? So yeah, let's get on into this. Let's see. Make sure I share this sucker. All right. Share, and we're going to go over here to trading view. All right. All right. So everything should be good over on my end here. Everybody should be able to see. Now, don't typically start off our weekly prep on, I guess, the second or third week in the month looking at a monthly chart, but we will just for the, because this was what I had on. So if we take a look over on the monthly, you'll notice that we bounced beautifully out of that bullish fair value gap here on the monthly. You also had a bullish volume imbalance, and that was from January into February. You see that gap higher right in there. I know it's a little small, but there it is. And so far, so good. So ultimately, in short, I do think we're going to get back up into all-time high territory, move beyond it, and at that point, after that, look left. You don't really got much to work off of, right? So at that point, at what point do we know where the top is? Well, we really don't, right? People will be using these extensions and all that stuff, but I think that's just I guess kind of, I hate to say it, and if you trade using that, apologies, but I've just seen no evidence that that is a really a sustainable model that you can use. So yeah, at that point, that's when it becomes paramount where we need or we're really not going to know, but at that point we would say to ourselves, okay, when does the music stop, right? And that's ultimately when big money decides the music is stopping, right? When they turn the music off, and hopefully we have a chair or we're out, but anyways, so that would be NASDAQ just on a higher time frame. Let's go over on the weekly time frame. You will notice that we shredded up this very small little bearish fair value gap here. No problem actually creating a fair value gap or a balanced price range through. Okay. And there she is right there. This is our previous all-time high, which we did go below it, but nothing too crazy. And we're on, right? The whole game plan for us at the start of this year really was, wait for a weekly imbalance to form. And at that point, we could start looking for a prolonged period of downside. And unfortunately, I had to pivot from that. And the reason I had to pivot from that was because we had a monthly fair value gap. And as you know, and as many who are, with us trading, you will notice that oftentimes the higher time frame will trump all, right? So even though we're looking at a weekly, which is a higher time frame, the monthly, just you can just see, look at the reaction to it, right? We get into that monthly fair value gap and all green from that point, right? Completely disregarding that bearish level that was set on a weekly time frame. So so at this point, to me, I'm looking for higher. I mean, ideally, and I know we talked about this some last week, but we really never got the opportunity to do so. Let me come back over here onto, yeah, here it is. So if you just look at our hourly range, it's huge, right? And when we get these huge ranges, it is a little bit more difficult to trade, right? Because you are anticipating some sort of retracement back down into quote unquote fair value or the mean or 50% of our range, right? So at some point, I think it's fair to say that we're going to get some sort of retracement, but have we satisfied our upside liquidity at this moment, right? One thing that varies between NASDAQ and versus the S&P or versus Dow or versus the Russell is that, see this 350 right here? This blue line. So if we were to just go over, and I'm going to show you where it comes from, but that blue line right here dates back to August 15th, and this is buy side liquidity. If we were to go through each of the others, you will notice that, we can do it anyways, right? Where's April 15th high? Whoa. There it is. See how we took that out already? Now let's come over to Russell. April 15th high. Whoa, right here. Took it out. YM, Dow, April 15th high. Boom. So we've taken them out on all of the other indices except on NASDAQ, right? So you have a little bit of a sixth sister on NASDAQ. What does that mean? Really just the weakest out of the other indexes, right? And if that's the case, then ultimately, obviously, for me personally, this is what I like to trade. I like to trade NASDAQ. But if we are, showing some divergence away from the other few indexes that we can follow, that's not really ideal for the intraday trading conditions. And that's what we saw last week, where NASDAQ really wasn't offering us much of anything. Last week was probably the most I've looked at individual stocks in a really long time and traded those. really for quite some time. And really, just the reason for that was even some of the setups that I had attempted to take, right? Ultimately, last week was pretty much a wash for me. It was pretty flat. Now, with that being said, um, those setups that still looked good, there was just no follow through or no carry through on them. There were a lot of sloppy wicks. And those are typically conditions that I tend to avoid. And honestly, I'm going to continue to try and avoid that until I'm shown something different, right? And we just really haven't seen it, unfortunately. So that's why I'm going to be focused much more on individual stocks again this week, at least in the early part. I haven't looked yet. I'm going to do that right now while we're all on here and just look through for our calendar in terms of what types of high impact news that we have coming out. That way we can get a good jump start on what days I'm really looking to trade and what days that I'm really not. And that's really how I kind of base everything. So Monday we have nothing. So tomorrow I'm not really expecting much of anything to occur. Now into Tuesday we have PPI in the morning. Okay, that's good to know. Powell speaks at 10 a.m. Also very good to know. Into Wednesday we have CPI, and that's a pre-market. That's it for Wednesday. Thursday, unemployment. And Friday, we have no red folder. Okay, we got a couple Fed speakers, but no red folder. Okay. So, yeah, I'm thinking Tuesday, Wednesday, and Thursday will probably be pretty solid. Friday, not much going on, just a couple Fed speakers. So, and tomorrow, don't really have high expectations, knowing that we got some pretty high impact news data coming out. So, but again, really what I'm looking for at this point, especially since the other three indices that we look towards have taken out that buy side from, mid-April. I'm actually going to be looking for some sort of retracement, right? And look, at this point right now, is there anything to justify me looking for a retracement at this exact moment? No. Okay. I'm just putting that out there, right? While I still feel as if we could get some sort of a retracement a little bit lower. If we were to get to 50% of this range right now, look where that brings us on into our weekly. Okay. Check these numbers right here on this weekly fair value gap. 983 is the high of that, right? And let's just for the purpose of this, let's look at the low, 901. Okay, let's see where we come over here. If we were to get down into discount here, that brings us just into that bullish weekly fair value gap, okay? And again, nothing at this exact moment is showing me any indication that we are going to retrace. I just favor it, and the reason why I favor it is because if we were to take out buy-side liquidity here, see some sort of imbalance form. We don't really have many imbalances that are untouched at this point on an hourly time frame before getting down into discount. So, and do we necessarily need to clear this buy side right here? I'm not so sure about that. We've taken it out on multiple different indices. That's something called SMT divergence. I actually made a video of that on YouTube if you want to check that out. But what that essentially is when you get divergence between indices. Specifically, I look towards the S&P or SPY for that to see that type of divergence. So you'll have one take out a high while the other does not, ultimately looking for some sort of retracement off of that point without shifting structure, right? It's not going to shift market structure. The move could be stronger to the downside on the weaker of the names, right? And that's what I would tend to look for. So again, just have to wait for some sort of imbalance to form. And then ultimately, again, like I said earlier, my higher time frame bias is still higher. I do believe that we get back up into all-time highs and beyond. It's just a matter of, are we going to retrace some on a smaller time frame, right? And here's your daily time frame as well. Let me just remove this for now. This is our current range, just like I showed you on the hourly. But if we were to zoom out here, and for anybody who trades or knows of the Mando model itself, you have your low to your high, you have your discount retracement into a bullish imbalance, and ultimately we look for highs in order to complete my model up there at 18,709. So that would be NASDAQ, S&P, very similar. The only difference would be that the S&P did take out buy-side liquidity while NASDAQ did not. Okay, so if anybody has any questions about anything that I had said just now, you could throw it in the chat and I'll try and get to it here. So ICT says first imbalance forms a new high and a new low on a trend. Do you think this could be used on this monthly fair value gap too. ICT says first imbalance forms a new high or new low on a trend. Do you think this could be used on the month? I'm really not following that question too much. Sorry, Fatia, I'm not really following what you're asking in there. We could look at the dollar, sure. Over to the dollar here, you will notice bearish order block on the weekly. We got into and rejected, creating another one right here. Filled it up just a tad, and we did hold on to this weekly fair value gap pretty nicely. Now, even if I was really bullish on dollar per se, it really wouldn't meet the criteria for me just yet, because we have our low to our high, discount retracement, run for highs. And then here's our second. I don't believe it is discounted yet. And no, it's not. Okay. You do have relative equal highs, but we have not yet gotten into discount. So I would prefer a dollar sweep of, at the very least, 103.88 prior to that. But if we were to zoom out and look at this from a much larger perspective here, I'm still waiting for my model to complete on the dollar here. So if we were to take a look from your high down to your low, here's your discount retracement. We got up into 50%, started to melt down, caught this bullish weekly imbalance right here and gave it a little bit of a bounce. Do we come down here, then take out buy side, get deeper into this imbalance prior to moving lower? That's a possibility. But ultimately, at some point, I think we're going to see 99.57 on the dollar. It's just a matter of time. And, you know, for a move down to 99.57, that would be kind of a, if I had to guess, I would say it would probably be a pretty damn bullish move on NASDAQ, SPY, you name it, all of them. So, so yeah, that's just the index talk. Again, if anybody has any questions, any charts you want to take a look at, feel free to drop them in below. I'll probably accept them for the next 15 minutes. I'm going to run through mine, and if there's none else, then I'm going to call it quits. So first, let's look at NVIDIA, because I think NVIDIA is going to be my top watch for the week. Okay, so taking a look at NVIDIA, at this point, nice recovery on this weekly bullish fair value gap right here. You'll notice that we did not get into discount. Okay, do we have to get into discount? Not necessarily, right? We do not necessarily have to get into discount. I believe earnings for NVIDIA has got to be coming up relatively soon. Yeah, about 10 days. But in the meantime, if we were to take a look here and we go down to a smaller time frame, looking over at the daily time frame, look how beautiful this setup is on NVIDIA, right? You have your low to your high, you have relative equal highs here, you have your discount retracement into a bullish imbalance, check. And so far so good. Shift in structure, retracement into a bullish imbalance, run for highs. Shift in structure, discount retracement into a bullish imbalance, run for highs. So far, so good. At this moment, just like I kind of said on NASDAQ, I am actually looking for a little bit more of a retracement. Now, Friday's move did not help that thesis, right? Look how beautifully we held on to that daily fair value gap, right? But let's come on over here to NVIDIA, and I'll show you, because I actually traded NVIDIA short on Friday, and it turned out to be a really good one. And it didn't have any follow through. So here's what I mean by that. So if we're to look at our most recent hourly range right here from our low to our high, right? Why would I not use this low right here? Well, if we were to go and draw this out like so, and this is exactly why I would not use this. So we had our shift in market structure here. By taking out this high, we have our low to our high. We got our discount retracement already into that bullish imbalance. There's your volume imbalance. Whoops. I'll zoom in so you guys can see it as well. Hold on. I really got to zoom this sucker in. Okay. Here's your volume imbalance. Discount bullish imbalance. Check. Run for highs. Bang. Okay. So my model would complete. Now, what was the start of the run that took out that high right there? Right. It would be from this low. Right. And that's why I'm using that low wick to our highs over here. Okay. You'll notice that we also left relative equal highs here as well. 922.25 and 922.20. Okay, those are relatively equal. So at some point, I'm anticipating those getting swiped, right? But at this current moment, you'll notice how we created their first imbalance inside that range, got up into it, rejected, got up into it, rejected, actually created another bearish imbalance here, rejected, rejected, and the third time is a charm. Turtle soup, we swept liquidity inside that bearish imbalance and ultimately rejected. And this is the move that I caught. I was playing that sweep of relative equal highs into that bearish imbalance, looking for ultimately the lows. Now, the one reason why, sometimes it's great, like it was on Friday. Other times it stinks because I missed out on a big move. But I did end up taking profits off of this low wick. And the reason for that was, I know we have relative equal highs above, but ultimately you have this bullish volume imbalance, and you also have this bullish fair value gap, right, which we're currently sitting inside of, right? So I'm glad that I ended up taking profits when I did. But there are times where I will still take profits inside that bullish fair value gap. And you might say, like, why would you take them there? And again, look, we did shift structure here. We did get into discount, right? And once we got into discount, that's when I said, okay, that's enough for me, right? And that's a 6 short still. 11 was really where I entered, and then down into discount. That's a $10 move on a 0 DT. It's pretty good. But that's why I guess I was being a little more safe, knowing that I was playing a 0 DT and ultimately just trying to catch that turtle soup manipulation move, Judas swing with that swing high swept and quick retracement down. So, but ultimately this is really, one of my favorite setups here. Does it necessarily have to get down into discount? I'm not so sure about that. I would favor that though. So ultimately I'm going to be waiting for one imbalance to form. And if that imbalance does form, I'll be looking at that one in order to drive price down into discount. And from that discount retracement, that's actually where I want to long NVIDIA back to those all-time highs. So here's what it would look like. It would get down somewhere into this area here for an ultimate move to sweep relative equal highs. One more imbalance to go at 932, and then it's kind of smooth sailing, low resistance liquidity run back up to that 974. So that's really my game plan for the week on NVIDIA. That's what I want to see at least. Now, if it were to take off without me and go run for those highs, so be it. I miss it. It sucks, but I'm staying pretty stingy on this one, just based on the size of the range. If I were to enter longs up here, really it really wouldn't be a favorable idea for me, knowing that this trade really doesn't go bad until 832. That's a big range, and that's not something that I really want to be a part of. So, yeah, I'd really would like it to come down into this 870 area, and then from there get up and get going. We might not even see this fair value gap here on the hourly, because we do have that daily fair value gap right off 50% here, right? And a daily bullish order block right here as well. So that would be NVIDIA, but that's one that I traded a little bit last week, and I'm looking to continue that. Now let me just come over to the chat and see. Again, if you are not subbed on YouTube, please do so. If you have any questions, put them in the sidebar. If you got any charts you want to look at, feel free to drop them. I'll take I don't know what's the word. Requests. I'll take requests for the next 9 minutes, and then I'm going to cut it. Let's see. When we're trending and retracing, the first imbalance fair value gap gives us another low or high on the way of the trend. So pretty much like NASDAQ on the monthly fair value gap, would bring us to all-time highs. Yeah, so we did retrace into that monthly fair value gap. Yep. Not necessarily in discount, but that's okay. The monthly fair value gap looks pretty good right now. Check that right there. So that would be NVIDIA. Let me just do a couple more that I wanted to look at specifically. Coming back over to Mara, another one that I wanted to take a peek at. Now, with Mara here, you'll notice last week early we ran higher, just retraced towards the end of the week, got into that bullish imbalance there on the weekly. Now into the daily, you will notice that we did get that shift in structure right here, taking out that high, rejecting CE, or the midpoint of this bearish volume imbalance here. We are currently in discount. You have 2 imbalances down in discount here. Ultimately, I'm anticipating these being respected and giving us a run back up towards highs, knowing that my higher time frame bias is in fact still bullish. The one, I guess, loop that can be thrown in here would be that Bitcoin, not necessarily on the monthly. Let's come over to the weekly, because I'll show you from here. If we look at our weekly range, we didn't necessarily, we were so close, but we didn't get into that weekly 50%. Could that be a possibility? Could be. Could that drag Mara's price down a bit? Could. Now, if we're to come on over here to the monthly again and look at Mara specifically, you'll notice that we got into the monthly fair value gap. There's still quite a bit to fill down below. I don't favor that. But again, this is just a way to, I guess, play probabilities and just kind of have an understanding, like, at what point does this trade really go bad? So that's the way I'm looking at Mara from right now. Really important zone here on the daily. I would prefer it to bounce from here or this daily imbalance as well, because if we were to look at it over on the hourly time frame, you're going to notice the same thing. We are now deep in discount of our current range, looking for a run back to that 21.18 to complete my model there. So that is Mara, just another one that I've been following for a while here, and will continue to follow over the next couple of weeks. So that's Mara. Now let's see, what else did I really have in mind? Tesla, actually. Yeah, I want to look at Tesla because this is another one that's going to be where I'm going to be viewing for a while. Now, also, just in addition to everything that I'm talking about right now, a lot of the setups that I posted last week too, a lot of them just basically did nothing, right? Nothing failed in terms of shifting structure or anything like that. A lot of them just stay flat, and I tend to look or gravitate more towards names that look like they can move sooner versus something that's building up, because if we look at it from a longer term perspective, that's fine, but if we're looking at something that we're anticipating a move to occur like this week, typically I want to make sure that the hourly lines up, and that's almost the most important. So look at the weekly. We took out the highs at 184.25 with that earnings move, and including the gap up from the next week. We are at the bottom of that volume imbalance right there. Over to the daily time frame as well, and we are discounted. I should also add that. So we're discounted. I should just draw this in here. It's a little sloppy, but there it is. Okay. Why wouldn't we anticipate bounces up in this area, in this fair value gap specifically? We're just not in discount, right? These imbalances that occur in premium of the range are over 50%. We don't really favor those as actionable fair value gaps, because we know the market likes to retrace into discount. So but discount of our daily range is actually down to 161, right? So if we do start off with an early week retracement, this is the area that I'd be targeting for myself. Now, if we're to come on over to the hourly time frame and look at Tesla, you're also going to notice very similarly, you got a big range from that earnings run up, specifically here, low to your high. Notice how there's no discount retracement. If there's no discount retracement, that's telling me that the range is simply just not set at the moment, right? And we actually don't get that discount retracement until the end of last week here, where we are currently in discount. And we do have a couple of hourly fair value gaps in here, just to be fair. Let me just mark those out. There's another right there. And that's where we currently sit, right? With sell side specifically residing here at 166.37. So that's Tesla. We're approaching an area in which I'm personally looking to look long. And reason for the long idea at this point is knowing that we do have relative equal highs up towards that 205.60. That 205.60 also gets us into our monthly bearish fair value gap right here. There it is, 205.60. So that's where I think we're going at the moment. So we will see how that one shakes out as well. So those are just three that are right off the top of bat. There's a couple other semis that look pretty solid. I think semis as a whole. You'll notice that on the weekly, NVIDIA really hasn't gone into discount yet, and that's okay. If we look at ARM, deep discount, right? That earnings move that everybody wanted to go crazy about, right? Everybody always reacts hilarious to these earnings reports, right? They see the dump early in after hours, and if you were to short that next day on anything that really got dumped last week, with the exception of Roblox, but even if you tried to short Roblox at market open following the earnings report, you'd be like $1 or so underwater at this point. So but it's just funny, the overreactions, right? Oh, that's a terrible quarter, and then you just see price like rip following that. So but this is ARM, deep into discount, solid. I'll come over to the daily. I think I have an alert set for this one too. I do. Yeah. Yeah, I would prefer it to get a little bit deeper into discount. Does it have to? Not necessarily, but it actually completed my model here on the daily on a smaller time frame. Right, ready? It happened twice, but low to your high. There's your discount retracement, your run for highs. Then your low to your high. Here's your discount retracement. Here's your bullish imbalance. There's your run for highs. So at this point, this is what we're currently looking at. Could we see more of expansion? Very possible. But for me, ideally, we would get some sort of retracement along with the rest of the semis before ultimately looking much higher. ARM has a lot of relative equal highs on this daily chart, right? So I am anticipating some semi madness to come, just a matter of when. And that's the ultimate question at this time. So, and then last one, let me do AMD too, because this is another one where just looks a little bit different than SMCI looks relatively similar as well. Discounted, bullish imbalance, so far decent. But AMD was another one where we actually did get that discount. So there's your 50%. We got down into it. Bullish imbalances, very solid. We got into this bearish imbalance here and rejected, creating a new low. So from this point, really, you'd want to see it start to make some progress back up towards that 168. That's an untouched bearish volume imbalance. And from that point, you could play pinball for a little bit. But again, I think semis are going to remain strong in comparison to a lot of the other names at this time. But so that would be what I got. At least those are just some names that I'm looking towards. So all right, let's see. We'll pull over on the sidebar here, and all right, cool. I see KR. Okay, let's look at KR. I know I haven't charted this one, so I want to look here at least. Okay, monthly fair value gap, solid, nice. And okay, so to me, from this point, it's kind of looking like your buy side target of 62.78 is the draw on liquidity. So let's just continue our way down. And for anybody who's asking, why the hell would you look at the monthly chart? Well, I don't have this charted. So I just want to get an idea of what I think the draw is on the monthly time frame and work my way down. So I'm going to go from monthly, weekly, daily, hourly, and I do this for all of them. And when I find the best, those are the ones I stick with. And oftentimes you'll notice that when you do have all of those things aligning, they typically will lead to higher probability trade setups, and that's the ball game that I'm sure everybody wants to be in. So okay, so if you look at Kroger here, we rejected a weekly bearish volume imbalance. We have a pretty big bullish weekly imbalance right here, and that lines up with our monthly as well. Let's just zoom out even more. Whoa, okay, so pretty big move here since our last. Let's just go through each. Okay, low to your high. There's your discount retracement into bullish imbalance. There's your run for highs. And my model would be complete. Let's come back over here. Low to your high. And let's just see if we end up getting a discount retracement at any time. Okay, there it is. I'm zooming in too. Sorry. It looks better for me here than it would on screen. But low to your high. Here's your discount retracement into. You have a bullish volume imbalance right here. I know you're going to say, how the hell do you see that? I don't know. They're just like ingrained in my brain now. I'll zoom in more so you can see it. Hold on. Okay. Oops. Hold on. See how small that is? There it is. And there's your run for highs. Great. Okay. So your next. Okay. What was the price run that started to take out this high right here from that low to this high? Okay. Right, there's your retracement into a bullish order block right here. There's your run for highs. Beautiful. Okay. Here's your low to your high. Yikes. What the hell is that candle? Sheesh. Discount retracement. Check. Bullish order block right here. Check. Run for highs. Beautiful. Okay. On to the next. And every time we complete and run through those highs, that's my model right there. That's a completion. Okay, here's your low to your high. Why am I mapping that out? Well, that's what we use to take out this high right here. Okay, low to your high. Here's your discount retracement into your bullish fair value gap here. There's your run for high. Okay, Mando model complete. Now let's run it over here from your low to your high. Here's your discount retracement into your bullish volume imbalance. Run for highs, and so on. And now you're going to notice we actually got a ugly little shifter here. Hold on. So there's your run for highs. Boom. Now, could this be a turtle soup move, knowing that our overall direction is likely higher, right? So here's the thing, right? We'll look over here to our monthly time frame and we notice, okay, we don't have any monthly imbalances here. We see this strong move off of discount, right? If our our monthly range is going to look a little bit different. So there's your low to high, right? Ultimately expecting 62.78 to get smacked. So that's why in this situation here with your weekly chart, I wouldn't necessarily move it to the start of the run to take out my high, because then it would look like I got a shift in structure, when in reality, this is just a higher time frame liquidity sweep, which is ultimately still targeting your highs up here, right? Thank you to the monthly chart for that, right? Now, we can look at this from a number of different ways. We rejected this bearish volume imbalance here, okay? We have this in our back pocket. We still think price is going here, right? If you think differently, that's okay. It's just that's what I'm looking at the moment. Now, here's where it gets tricky, okay? Right? We get into this weekly bullish fair value gap right here. But for me personally, I prefer discount retracements, right? I'd rather it get down into here. I've just shown you guys on this way up here that price tends to retrace into discount, right? I showed you about 7 examples on Kroger's run higher. So at this point here, this doesn't necessarily mean that price cannot just run up towards that 62 from this point, right? We can justify that trade still. We got into this bullish imbalance here, right? Specifically a fair value gap, just not quite discounted. So not something that I'm personally interested in at the moment. If price were to retrace into discount, that's a different story. But for me at this moment, not really what I look towards. Does not mean I want this to be clear. This does not mean that it can't make that run higher, right? I'm just saying from my own personal risk management type situation. I would just prefer it to go down into discount, knowing that price tends to do that, right? So again, here, low to your high, discount retracement, bullish imbalance here, and this is on the daily time frame. There's your run for highs, okay? And this is why I tend to not chase things, right? Because I know A, I'm going to get an opportunity, or B, just gonna get another opportunity on something else, right? But here is Kroger again, and daily discount is still a tad lower despite having a bullish fair value gap right there. So we'll see how this one shakes out. You have a daily volume imbalance right here that we closed perfectly on, and you have a daily fair value gap right here, which we previously rejected. But so we'll see how Kroger shakes out. So that's where I'm at on Kroger right now. All right, Ulta. Let's look at Ulta here. Come on over. All right. So Ulta, hold on. Let's come back over here as well. Ooh. You got 18 days to close back inside that sucker. We'll see. Yep. We'll see how that goes. But coming back over here, your weekly got into that volume imbalance right there. Look at that. That's beautiful. Right off 50% of that volume imbalance, believe it or not. Okay. So I think coming up some levels on Ulta that are worth noting would be 404.86 to 406.39, right? And you might say, oh, well, that's a $2 range. Like, what am I going to do with that? Well, we can go down to smaller time frames and we can shore up that range and make it, a little tighter, and which we will. But here, just off the top, some imbalances that we see on Ulta. You really do not want it to go below 368, which I'm sure a lot of people would already be out at that time. But 368, that creates a monthly bearish breaker, which isn't ideal. So let's come on over here to the daily time frame on Ulta, just to tighten up some of these larger windows, right? And let's just zoom out and make sure we can justify our bounce here, which of course we can, because we can justify every move that happens on this chart, every single one, right? So here's your daily bullish volume imbalance right there, and bounce. So far so good. You have a volume imbalance that has since been tapped up multiple times right there, so I don't really anticipate that causing too much trouble. Okay, you have another volume imbalance right here, which again, I don't really anticipate causing too much trouble. We filled it up, right? Could we get into there and price slow down a little bit? For sure. But I don't think that would be a rejection spot. This will be an interesting spot, 414, as we have yet to get into that volume imbalance. This is already filled. I'm going to look how perfect that is. Let's zoom in. When it's that perfect, you got to just look, right? There it is. Boom, filled up. So this imbalance here, I just wanted to be able to justify this rejection here, which we can if, there it is, bearish volume imbalance. But I'm going to remove it just for now because I just don't want to clog this sucker up too much. I'll leave it clean. Here's another volume imbalance. So you do have a couple volume imbalances that are, could slow price up a little bit, but that's okay. Because I don't really anticipate this or that causing much of any trouble here. Moving on. Now here's where it gets funky. So we see that we had 2 green days mixed in inside this downtrend, right? This is really where I'm interested. Let's go to an hourly time frame and see if we're going to create a breaker over this 412. Okay. Okay, so on Ulta, we do have a shift in structure, so very nice. Ready, here it is, with your move above these relative equal highs. Boom, 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 okay? Since taking that out, okay, this is your breaker actually, right here. So you have your low, high, lower low, and a break above the high of that sequence, and you can anticipate that candle acting as a support level moving forward. Okay, so I know it's not going to be necessarily in discount just yet. You have more relative equal highs here at 404, so I think that's the likely run first, maybe even into this bearish fair value gap right here up at 406. And from that point, if we were to get the retracement that we do oftentimes, I would like to see something like this. So run up into here, get your retracement down into here, and then from there, run it and keep it moving higher from that point. And why would I want it to get down into here? So if we were to look right here, low to your, let's just say this is our high. Look where your breaker is now. Discounted, right? And that's really where we want them. We want our levels to be discounted. I think that's the most ideal, knowing that price likes to retrace down into discount. That's really what I'd like to see on this one at the moment. And this is on an hourly time frame, so again, this could take some time to shake out. So apologies if these black lines aren't perfectly timed to perfection, but I think this is the type of move that we would see on that. So yeah, this is a solid one. I'm going to be watching the breaker for sure on Ulta. So that's Ulta. Now let's keep on rolling. Again, if you want to, oh, there it is. Cool. Yep, Donnie, I am currently on Ulta right now, man. Yep, we just did it. So we'll look at a few more here. And let's see. Baba. Okay, can you check Baba? We have a weekly breaker finally. Okay, so let's look at Baba and see how it's shaking out here. Okay. All right, so here is a perfect example. I have not looked at Baba in, I can't even tell you how long. Seriously, I have not looked at it I probably since here, right? The last imbalance that I had mapped out, right? And that's so long ago, right? But here's a perfect example of, despite all of this nonsense, this is months of nonsense. This is the entire year. This is since November of chop and garbage, right? This probably made people pull the hair out of their head. But guess what? Absolutely nothing changed in the structure of this idea whatsoever, right? We have it mapped out, low to your high. Here's your discount retracement. I know it's spent weeks and weeks and weeks inside, right? But this is just not really an ideal setup at that point, right? And we know how all these Chinese names have been moving recently, right? It's been a drag. They'll gap up in the morning, and by the end of the day, they've basically given back all of their gains, and vice versa. But this is just a perfect example of how you'll notice that it's amazing to see how, despite just chopping around, another one of it like this is Twilio. Price is just staying in the same exact spot. It's not broken down whatsoever. And that's just the downfall to options, where they can chop you up, ruin your premiums as a result of it, because of theta. But anyways, there's your low to your high. Here's your discount retracement, bullish imbalances. Check, 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 check. We finally make our way over a bearish imbalance, which is great. And from this point here, even still, ready? Check this. I bet you if we look at a daily, it'll be even more clear. We took out that high with this price run. Ready? Low to your high. Here's your discount retracement into bullish order block. If you go to the daily, I bet you it's a fair value gap. And then there's your run for highs. My model's complete. Okay. So from this point, we got to just zoom out a little bit, and whoops, here it is. Now we do have a new smaller time frame range, right? And this is one that we can continue to keep an eye on. So we took out these equal highs right over here with what price run? From low to high, okay? We are rejecting a bearish fair value gap right here, okay? So our anticipation could be that price will retrace back into discount at this point of our smaller time frame range, which would bring us down somewhere into that 74 range, right? That would be ideal for me. You have another volume imbalance, which is not quite discounted yet, but that's right at 75.65. Okay. But that's currently where I sit with Baba above this bearish imbalance right here. And you don't really have much holding you back until 89, which is encouraging. And ultimately, at some point or another, when, great question, but I think 121 and specifically 125 highs, right? This again, this is a weekly time frame. This could take a long time, but this is a pretty solid setup right now, and that completion of my model is coming from that 120, 130. But again, you see it's taking so long, and that's why I've avoided these Chinese names. They haven't really been moving with authority whatsoever. I have shares of Baidu, and it's very similar situation as Baba, just taking so long to actually make a move and get going. But that would be Baba. All right, so let's see, what else do we got? Let's see. I'm just clicking around. Okay. So we see D-Dog. Okay, D-Dog. I think we did D-Dog in one of our live sessions in the group, and I was kind of, yeah, it wasn't really all hot on that. But Fatih says D-Dog swept lows and closed above lows on weekly. Also, resistance turned into support, it seems like. Can you check it? For sure. Let's take a look. Okay, let's see if it cleared up any of the sloppiness that I had seen the last time I looked at it. So D-Dog, here's your monthly. Okay, we faded this monthly bullish volume imbalance. So I'm personally anticipating a retracement into discount. That's what I would want at the very least. We did turtle soup this move right here. Swept the low and bounced. Okay, now let's come back over to the weekly. Look at D-Dog. Okay, very similar situation. I personally want it in a discount imbalance. So you have one right up here at 108 to 104. And then more specifically, you have another one down here, which is a much wider range, 102 to 83. Let's see if we can get even more precise by looking at the daily. And again, this is how I do every single name that I'm looking at, just to try and be as precise as possible. Okay, so if we're looking at this one as well, range, we're not really given any additional answers, but you do have a turtle soup move. I would be looking at this as a potential rejection level right here. So I know, it might not be what you wanted to hear, but this would be a daily bearish breaker. Okay, you have your high, low, higher high, flush down through lows. On retracement, we would anticipate this to act as a resistance moving forward. So that's what I'd be interested in right now, because ultimately, let's map out our daily range. Ready? From low to your highs. Okay, we're still nowhere really near discount. We do have a bullish volume imbalance down here, which I would favor. That's at 106, but that's where I'd currently be at. I think this breaker could actually set up a pretty nice short on D-Dog. And we took out these lows, which we can justify as a shift in structure here on the daily, or offering us potential discount retracement. But that's where I'm currently at on D-Dog. Yeah, I don't see anything else that I'm really interested in here. But also you have a daily or a weekly bearish volume imbalance or gap down or showing you urgency to move lower, right? So if you see that gap down occur, right? Specifically, this is the really important part about these gaps, right? When you see gaps down that are getting you in discount, oftentimes those actually paint an order block and send you flying. For example, everything that I say here, you can back test and check me on. I don't speak in nonsense. Gap down in a bullish range. Okay, look, here's your bullish structure, low to high. Here's your discount retracement. There's your gap down into discount of your bullish range, specifically a bullish level in discount. Look what happened. Right? Check any chart. Go for it. It's a recurring theme here. But here's how it varies, right? Look where this gap down occurred, right? Are we in discount here? Well, let's take a look. Not quite. No imbalance, right? There's your gap down, right? And ultimately you really get pumped lower there from that point, right? So that's the difference when you see the imbalances that are occurring in premium versus in discount. Oftentimes the discount gap down sets up a bullish order block forming. Don't take my word for it. Back test it yourself and you're going to be able to see it because it happens all the time, right? So let's see. Florina, we did QQQ. It's at the beginning of this feed. If you go over to YouTube, oh, you're on YouTube. Yeah. So if you can go back in time, it's the first thing that we let off with here tonight. So, all right. So we did Ulta. Why is everybody talking about Ulta? It's a pretty good setup, but sheesh, everybody's on that one. One of the big accounts must have tweeted it or something. But yeah, that's Ulta. Let's look at Sound. I love this one. This one is gas. So ready? Check that. This is the monthly, right? Ready? Low, high, discount retracement, bullish monthly imbalance. My model completes at 10:25. Come over to the weekly. Gets a little more clear. Ready? Hold on. Oh, yeah. Look at that. That's a beauty, huh? Shout out to AI photo generator that I use. But here's a Soundhound again. Here's your low to your high. Here's your discount retracement into a bullish breaker. Low, high, lower low, break above that high of that sequence. We anticipate that acting as support. Bada bing. There's your run. Okay. Why would we have that ugly high wick like we did? Well, here, bearish fair value gap right here. Okay. Do I anticipate these causing a rejection and new lows? No, we're in a bullish trend right now. So these are just looked at as speed bumps. And here was your second bearish imbalance. Again, this one we closed above, so I really wipe my hands at that. But we do have this bullish volume imbalance right here. Okay. And this is the biggest thing when it comes to these, right? Ultimately, what is my draw on liquidity? Where do I think price is going? And I'm in this trade and I am looking at 1025. That's where I want it to go. And I think it will get there. But just to be fair, right? It's not going to go straight there. Oftentimes things don't just go in one direction for a prolonged period of time without, getting into some of these imbalances, rebalancing them and looking for liquidity lower, which ultimately it seemed like we did towards the end of this week. But still a real nice setup. I just think time is the biggest thing here because ultimately this looks pretty solid. I mean, even if you come over here to the daily time frame, yeah, it's lining up pretty well. So here's your low to your high. There's your discount retracement. Here's your daily bullish volume imbalance right here. Okay, so structurally, this doesn't go bad for quite some time. That's the one caveat to this. It's like risk reward is basically, 1-to-1. It's not like a big discrepancy between them. But you also have a pretty big imbalance right there. That's a bearish imbalance. It starts at 618. That lines up with your weekly level. But beyond that, not much doing there. And I know this is something related to NVIDIA. If anybody has that information, please drop it in the chat. But I don't know if NVIDIA funds this company or what they do. But if we're anticipating some semi madness, well, I am at least, then as a sympathy type of idea, and the setup looks solid too. But you have this bullish volume imbalance right here as well, just worth noting. Right there. So that would be Sound Hound. But all right, let's keep on rolling here. Let's see. If you're on YouTube, thanks for checking in. Please subscribe, drop a like on this video. Much love always. If you're on Twitter, feel free to share this video. I appreciate it. I appreciate the Twitter loving. I don't know what's going on Twitter. It's starting to pick back up. Maybe it was because I changed my profile picture, but for a while people were like, yo, I'm not even seeing your tweets. I got your post notifications on and I'm not getting any. I think it was because I changed my profile picture and I lost my check for a few days, and now it's back and it seems like people are seeing the tweets again, which is good. But yeah, I don't shit post much anymore. So and what I mean by that is I just don't post like dumb stuff. It's usually just about what's it called? Mainly charts or just thoughts about the economy and stuff like that. But all right. So JH said computer stacks. I don't know if I'm missing a comment here, but if you want to give me more context with that, that'd be great. No problem. I spare you the man. Thanks for popping in, man. All right, so let's look at docu. That's, yeah, I caught up on all the others. Good. All right, docu. Do we finally get the drawn liquidity on docu? All right, let's see. I'm not sure if I have this. Okay. Wow. I might sound crazy here, but docu don't look bad. I hate this company, but I'm just eyeballing. So there's so many names. Go chart them on whatever time frame. If you were just to map these out, these ranges, right? They're enormous, right? And if we believe in the idea that price retraces into discount, like these could be huge runs, right? There's so many names like this. But I'm just looking at this one from the monthly perspective specifically. We have relative equal highs and we have 69.45. If we're to take out that 69.45, we actually create a bullish breaker, which again, on DocuSign, it sounds crazy. This is not a bad setup at all, Fatih, just from a monthly perspective. When we look at something from a monthly perspective, this can take a lot of time, okay? Just putting that out there. But worth noting, so we can come on over here and look at the weekly and see if anything is more imminent. Docu, yeah, here it is. Okay, so I do have this one a little bit charted here. Okay, my model completes at that 64.76 relative equal highs right there. Okay, but we are just worth noting that the first attempt that we got into that bearish fair value gap right there, we rejected it, ultimately getting caught by a bullish fair value gap. Okay, so what is that telling me? Okay, right? So you might say, oh, well, we're rejecting bearish levels and respecting the bullish levels inside a bullish range. What is that telling you? That's telling me that this is probably just a speed bump. Slow us down a little bit. Yeah, I think docu's going to end up going here. It's just a matter of time, right? Weekly setup could take time. Again, I know I'm on repeat by saying that, but it's important to note. That's just how I kind of identify a higher time frame draw on liquidity, where I think I have to think to myself, where do I think price is going from this point? Okay, here's just an example of why I like to buy in discount versus premium. Okay, so we can go through each one of these little, ready? Oh, whoops, hold on. Oops. Discount retracement, bullish imbalance, run for highs. My model's complete. Okay, here's your next one. Whoops. There it is. No discount retracing. This is where your weekly comes in. Okay, so now if we were to draw this map up, notice how, despite us bouncing here, we don't get that high, right? Extremely frustrating. Can we justify why it bounced? Sure. There's a bullish fair value gap right there. Okay, but not ideal for me, knowing that Again, this is something that I back test 100 million times, and you all can do it too. Price loves to get into discount. Don't know why. Price loves to get into discount. I have a zillion examples of it in its own personal folder in the Discord of my model on how often you see these discount retracements. For whatever reason it is, price likes to retrace into discount, specifically imbalances in discount, and it likes to run from that point. But on the daily, here you go. Okay, so if we're going to break this down, this is our overarching range, higher time frame range. But if we want to look at our smaller little blip in time, here's your low to your high. Here's your discount retracement into bullish imbalance. There's your run for highs. My model is complete. Okay, on to the next. Here's your low to your high. Okay, we took out that high with what price run? Low to high. Notice how there was no discount retracement until there it is. Boom. Discount retracement, bing, bullish imbalance, anticipating a run for high. So at this point right here, if we want to get even smaller in terms of what our range is looking like, and this is what it would look like on an hourly time frame, here's your low to your high, here's your discount retracement. Ultimately, my model would complete on a smaller time frame at 60.42. Right? There it is. Okay, and if you were to look at the hourly, I bet you that's what you would be able to come up with. That would be your range and mapping. But that's DocuSign. Yeah, I'm surprised. I think this is, because you think about it, it's like DocuSign, right? You could do that on an iPhone now. It's kind of obsolete, right? Do you really need a website or whatever it is, a product or that allows you to sign documents? You can literally do it on the iPhone. But whatever, it is what it is. And I'm sure there's a lot of copycats in that realm too. But whatever, don't matter to me. Don't care as long as it can offer me some insight and give me a vehicle to make some money. That's fine by me. But that'd be DocuSign. Okay, yeah. So I did the video already there, JH. If you want to go back in time, if you could check on YouTube, I'm not sure if you can go back in time on the Twitter one, but if you go to YouTube, the video was the second after NASDAQ that we went over tonight. Oh, you're talking, yeah, okay, yeah, I was referring to SoundHound, SOUN. They had some sort of relation to NVIDIA, but I was aware of the SMCI connection. I remember when that happened, it just went bananas after that. But yeah, I don't know what the connection with SoundHound is. SoundHound AI has something to do with NVIDIA. I don't know off the top of my head though. So that's DocuSign. Let's look at Coinbase. That's JH just brought that up. So we'll start on the monthly, work our way down as always. But okay, so if we're looking, technically we actually have a bearish range on Coinbase. Here's the difference, and this is why I don't value it all that much. Here's why. If you look at Coinbase, of course, you'll notice, okay, what was the price run to take out these lows here from high down to our low, right? And you could do the same thing right here, okay? Here's your first initial range set, okay? Here is your discount imbalance. I know it's a bearish one. You haven't seen many of these, but there it is from high to low, discount retracement into a bearish imbalance. There's your run for lows. That's the completion of my model right there, okay? And that's on the monthly time frame. The reason why I don't really value this bearish range, this one that we currently have right now, is due to the fact that we really don't have all that much information on Coinbase. Still a relatively new name. I know it came live in 2021, which is 3 years ago, but still not all the data or information in the world in terms of where liquidity lies, right? And if that were the case, right, and we can never see a shift in structure, and then we would always anticipate this company kind of being trash. And I don't know if that's fair to say after just a couple of years. But you have a monthly fair value gap coming up right there at 196, goes down to 175. Big range, I know, but this is a monthly level, okay? So ultimately, that's where you would anticipate some sort of bounce. But now let's move into a smaller time frame here. Come on. Coin on the weekly. Beautiful. Okay, here's your current weekly range, your low to your high, okay? And I just want to show you the efficacy of my model here on Coinbase, because this one I've been on for a long time. Here's your low to your high. Very similar to what were we looking at that was just sitting inside? Ababa sits inside for so long, then it starts to go. There's the completion of my model after that discount imbalance. Check. There's one. Low to your high. Here's your discount retracement into bullish imbalance. Here it is. Run for highs. Random autocomplete number 2. Okay. Here's your low to your high. Okay. Took out that high with this price run. Here's your discount retracement into a bullish imbalance. There's your run for highs. Random autocomplete. Now let's come on over to the most recent one. There's your low to your high. Okay. Tap discount actually came right back down for it as well. Could we see a deeper discount here? Yeah, that's possible. Somewhere in this vicinity. That lines up with your monthly range too. So maybe a tad deeper. Maybe you test the high of this candle, which would be a mitigation block. Okay. If we come on over to the daily here, look at Coinbase. Okay. Oofa, there's your daily shift. But here, ready? Come back over. And let me just remove some of this nonsense here. These are old levels. I haven't really looked at the daily in some time, as you can see, but here it is again. Here's your, again, this is just a way for us to try and be more specific with what we got cooking here. Here's just an example. I know I brought up I think it was on D-Dog, but the breaker situation. So high, low, higher high, break down below. We would anticipate the low of that sequence to act as a resistance level moving forward, which ultimately no, here it is. Let me change the color of it so you can see it's a breaker. Here she blows. Okay, that's your breaker, and price gets up into that breaker, ultimately rejects the breaker. So this is really a daily fair value gap that makes sense. I know it's big, which stinks. You would have to go down to even smaller time frame to try and make this a little bit tighter, but that's from 192 to 170. That's a big area of support that you'd want it to hold. Also lines up with this mitigation block right here. On the flip side of that, you can also look towards this low, high, lower low, break above. You have a breaker here that's much deeper in discount. Right, but that would also be valid on the daily time frame. So I'm thinking a little bit more of a retracement, and then really this is the candle that I want to hold. I know it's a big zone. I'm not sure how tradable that is in terms of options, but that's something at least that I'm keeping an eye on. But that would be coin. All right. Anthony, thank you for waiting, Anthony. Sometimes these get backed up and they take a while, but I appreciate everybody who's sticking around right now. If you're not already, sub to the YouTube. I got a ton of videos that I think are really helpful on here for you guys. But here is Wolf. Also, really appreciate when you guys just throw a like on the tweets. It makes me feel like I'm doing it for a reason and not just wasting my time. Okay, so I got to be honest here, dude. I'm sorry. I know you're gonna be pissed, but I don't tend to chart or use these concepts on penny stocks. Now, I bet you if you looked at and used these concepts on penny stocks, it would quote unquote work, right? You'd be able to justify moves and such. The reason why I don't chart using or chart penny stocks this way, or even really look towards penny stocks in this manner, is because to me, the necessary liquidity in order to move price on these is not present. What does that mean? So you notice how we just looked at every ticker that we did already up to this point. They were all large caps and such, and you'll notice that you get reactions at certain points of the chart that make sense. You can justify it, right? Specifically after sweeping lows. Now here's an assignment for everybody in here who thinks I'm a witch doctor or something. Go to the chart, and every time you see a huge volume bar, check and see if we took out a swing high or swing low, preferably on a higher time frame, such as the daily, weekly, monthly, you name it. Right? Every single time that we take out a swing high or swing low on a higher time frame, you will notice that volume magically comes in. What? No way. Really? Look for yourself. I don't want to be the bearer of this news that volume is a lagging indicator. Sorry. But you will see that every single time that price takes out a swing high or swing low, you will get a reaction. I noticed that when looking at penny stocks from this way, that despite there being efficacy, again, why would price reject here? Well, we have a bearish fair value gap on the weekly right there, right? We can justify the move sometimes, but it's not as precise as it is on large caps because the necessary liquidity in order to move price is not present, in my opinion. Okay, look, you might say to me, well, Mando, yo, you just show me your model. There's your model. There's your discount retracement. Here's your bullish imbalance. And now I'm waiting for highs, right? Doesn't that make sense? Well, yes, I would agree. But the difference is you need excess or external liquidity, meaning people from the outside coming in order to move price on these. Okay. You don't hear people get arrested for pumping and dumping Tesla or Microsoft or Nvidia. You hear them get arrested pumping penny stocks, because to me, the necessary liquidity is not present on the chart. And if the necessary liquidity is not present on the chart, that means it needs to come from outside of the market in order to move price. And, as much as I can foreshadow or anticipate price moving after taking out lows on higher time frame names like Nvidia, Tesla, Microsoft, you name it, I can't do that. I don't know when people are going to come in and swoop in and push price higher, right? So I just wanted to be fair with that analysis, and that's usually why I tend to stay away from the penny stocks, despite them still moving pretty smoothly. It's just the need for excess liquidity. This can stay within this range forever if no more money comes in. That's the way I look at it, right? And why don't you need that new money coming in on the other names that I mentioned, the large caps and stuff like that? It's already on the chart. And you're the way that I would defend that argument would be turn on your volume bars, and every time we sweep a higher time frame low, you'll notice the volume bars get bigger. Why? Because we're taking out stop losses. We're taking liquidity, taking out resting stops in order to generate more money for the algorithm to go find some more money to the opposite direction. That's it. So sorry about that. I know it was long-winded, but that was just a way for me to kind of break it down. Oh man, sorry, Gage. I know I've gone over this a million times, that one. That's why I was kind of racing through it. But yes, Gage, you can check them out. I got the really the three that that are to me a part of every single chart that I do would be your imbalances. I have a video on that. Liquidity, which I just kind of touched on right there. And then your market structure. That's the third that I use. Whoops. That would be the third that I use. And again, I know I ran through that quickly. Apologies, but I was just trying to, in short, explain why I avoid the penny stocks. But yeah, so let me just make sure that I'm not skipping out on anybody else here. No, okay, cool. So we should be. What are your thoughts on the comparison of 24-hour charts, including after hours on TradingView and daily candles, which only have the stock market times on it? I don't really know, Fatih. I've never checked that out. Maybe I could do that. So 24-hour versus a 1 day. I didn't think that there would be any difference, but there could be, because one would offer you the after hours. And I think it would just probably help you be a little more precise, because I think having after hours information on is really important. You're getting levels in that pre-market or after hours time. Not always does it move so dramatically, but there could be an instance where you get a level formed, and rather than just having a big gap, you actually have a specific level that could be tradable. Oh, JH, thank you for this. SoundHound AI will offering a voice assistance that runs on NVIDIA's Drive for its automobile customers. This is a unique generative AI feature that provides drivers the ability to ask questions related to maintenance, safety, car settings, among other things. Thanks. Yeah, I knew that there was some tie-in between those, but yo, Kale, what's up? Thanks for popping in. Sorry, that was 10 minutes ago. VLO, for sure. Oh, it's part of your homework assignment? Cool. All right, let's check out VLO. Let's do it. All right, so okay, here's your low to your high, right? Why would I not go down here? Well, could I still go down here? Sure. The reason why I do not do this when we have these choppy consolidation type moves, I like to go from the immediate run. So immediate run that took that high was that low to that high. Right? Here's your discount retracement into a bullish imbalance. There is your run for highs. My model is complete. Okay. This is before I took off the extensions, because it's, to me, it just doesn't work as well as you would want it to. But here, look, here's just a smaller little time frame Manda model. We just saw how it completed on the higher time frame, but look, low to high, discount retracement, bullish order block, run for highs. And this works on anything. No discount retracement there. Okay, this is what I currently got on, and I would actually, personally, I would have it like this, to be honest with you. Reason being, we kind of chop through this imbalance right here, but this would be my zone. So we are in discount, not bad. And again, this is on a weekly time frame. I think you have one smaller one below right here. And also, let's look at the monthly just to confirm. Yeah, okay, so you got a monthly imbalance right here. Nice. Nice. Okay. And I believe, if I had to guess, this is at all-time highs, and it is. Yep. Okay, so yeah, that's right in your monthly fair value gap. So once I see that right off the bat, I say to myself, okay. Ooh, you see this scale? Low to high, not quite discounted despite being in this imbalance. So 150, 250 brings us into discount of our monthly range. Where does that bring us here? See how your range can be different on the monthly versus your weekly as well? So just a tad lower would bring you into discount on your monthly, also just deeper into discount on your weekly time frame. But it's a way to try and pinpoint and be as precise as possible. That way, we're not our range and our risk in our trade doesn't have to be so big. It's just a way to really sure things up, and I like that. So that's VLO. Hopefully that was insightful there. Yo, he said Verstappen. That's amazing. All right, we'll look at shop, and then I'll do Tesla really quick. JV, we did it already, but I can run through it again real quick. So let's do shop, Tesla, and then I'm donezo. All right, let's go. Let's come on over here and we'll do Shopify. So here's the Shopify. Obviously got smoked. It finally got down to where I wanted it in discount to the range. So yes, this is ugly, but we are in discount of your monthly bullish range. Look where we are in terms of our higher time frame range as well. At 50%, it's 99, right? So that's really where I think the draw is. Coming over to the weekly chart, you'll notice that we are deeper. This is what I drew out all the way back to February 20th. If you think I'm BSing, go to my Twitter and just do @MandoTrading with the $ shop, and you will see this post from February 20th. I wanted it down here, and this is a weekly breaker. Low, high, lower low, breakthrough. We would anticipate that acting as a support level moving forward. You also have a bullish fair value gap here that lines up with your breaker. So I know it's scary, but it's solid. And, at this point, it offers you the best risk reward. Could we go a little lower? Or here's the better question. At what point does this trade idea go to, what? SHIT, below 45.50? That's a pretty big range, but is that range doable knowing that your potential win could be up at 99? It's got to make sense for you personally, right? That's the biggest point. But, and again, this is a monthly, weekly setup. This could take a while, just worth noting. But that would be Shopify, just deeper into discount at the moment. Yeah, no problem. So let's run Tesla again. So if we look at it from the weekly, and we're going to work our way down, of course, but you'll notice that we shifted structure here with that sweep of March highs right here. Also, in addition to that, you have the April high, and I know that's the one that I referenced in the tweet, but there's your low to your high. Here's your discount retracement. We are now in discount on our weekly, and we filled up this bullish volume imbalance or gap higher. Okay, now let's move down in time frame. Here we go. Coming over from your low to your high, we are in discount, filling up that imbalance here. So let's see how price reacts to this imbalance, right? If we're to gap up, that's pretty encouraging that we don't need to go deeper into discount. But if we don't, then I'm going to allow it to show me. What does that mean? So if we get a little bit of an imbalance on the daily, that's great, because then I could say to myself, okay, we see the imbalance on the daily. I can play this next imbalance and feel pretty good. Yes, I might be a little late, but it's giving me that extra little layer of confirmation that I don't actually need to see price retrace down into this 162, which is deeper into discount. Okay. If we come over here to the hourly, same thing applies. The only thing is, and this is where it gets tricky, because if we have identified the drawn liquidity, and to me, it's higher at this point, right? And that's where I think price is going to go. But how can we be more specific and precise? So to me, I would prefer to take that 166.37, which would create the turtle soup move, aka liquidity sweep in the inverse direction of our overall draw on liquidity, which was our recent high here. Also, I favor us to run through this 205.60, right? That's where I think we're ultimately going. And the reason why I think we're going there is because I think we are going to get a test into our monthly bearish fair value gap right there. So that's the way that I kind of have that thesis structured. So preferably you would sweep that hourly low, create some sort of imbalance higher, and then from there, kind of sets the stage. But that's just the way that I'm looking at it for now. But that's what I have on Tesla. So I think that's all I got. So for anybody who is new here, thanks for sticking around. Thanks for joining. Appreciate that. Anybody who's been here a while, I hope this was insightful. And I hope we all have a good week. Remember, no data tomorrow. We have data Tuesday, Wednesday, Thursday this week. And ultimately, let's hope for a good one, because last week was really a snooze fest. It was incredibly boring, painfully boring, actually. So, I see one more. OCESP is about to be listed in Rocket. I'm not sure what that one is, Seeker. All right, one more pregunta for you, sir. What is your signal to go long when you trade? What I mean is, what is the signal for you to say, okay, I scale, enter long here? If these are in your YouTube videos, just say, yeah, you could check out the video on the imbalance. I think the imbalances are so important because A, it's something that you can back test and actually see it works, right? It's no BS. If you watch this video from the start to finish right now, you would say, oh my God, price really responds to these imbalances, right? It's an imbalance in price at a specific price point. But those imbalances can be used to structure the entirety of a trade. It could be your entry. The low of that candle could be your stop out. The high that we've identified, which is our draw on liquidity, or your swing high, right? That could be your target, right? So everything is structured off of that imbalance, and that's why I think it's such a powerful concept. And again, it's something that you can back test and test, right? Everybody wants to talk about all these different strategies and stuff, but those are much, much more difficult to actually prove they work, right? They'll work sometimes, not others. Why, right? That's why I changed. I needed to go to something like this where I can actually justify why I was right versus why I was wrong. But oh, you were just joking about that, Seeker. But all right, I'm done here. Thanks again for everybody sticking around. Good luck this week, and I'll catch you all soon.